As you mentioned, we're getting a bit of an update onto some of the small cap stocks that David Mordant has got on his books right now. David, thanks so much for joining us. Let's just start off with what you're looking at when you focus or when you make investments in small caps.
Sue, we're looking for a market capitalization of between 750 million rand or 2.25 billion, which is 100 million to 300 million dollars. We're looking for a company with a pedigree that's been listed for 5 years, preferably 10, that showed increasing headline earnings per share and dividend per share, and cumulatively the increased headline earnings and dividend is giving you 20% plus per annum.
Now, a couple of the stocks that you've got on your radar at the moment kind of all have that within their books, and they're also all family run. And let's just start with the first one, which is in the property sector, Premium Properties. Why are you seeing value in that right now?
Well, Premium Properties is a property development company in Gauteng that does all forms of property, retail, factories, offices and residential, converting old office blocks into apartments and flats. And somebody did an exercise the other day and said of the shares listed on 1st of January 2000 and still listed today, Premium Properties has actually done probably the best on the whole Johannesburg Stock Exchange. It's shown over 30% compound growth per annum over the 10 and a bit years.
Now, that's pretty interesting considering the drop in property prices and the increased inflation and interest rates that we have had over the past few years.
Property is a very underrated asset in South Africa. We're all concentrating the whole time on the stock market and on the bond market because they're far and away the biggest. But property has been an excellent investment in South Africa since the free burghers were granted their first properties in 1663. For almost 400 years, for 350 years, it's been an excellent investment property.
In terms of prospects for Premium Properties?
I think it's excellent. It's still family controlled. It has a sister company called Octodec Properties, very similar, slightly slower growth, but nevertheless the same 20% compound plus per annum. And remember, 20% per annum for 20 years, 100,000 rand becomes 3.8 million.
A defensive stock, Spur, did report an increase in headline earnings of up to 16% in the interim results. This is also a stock in your books. Just talk us through the prospects for Spur.
Spur is, of course, in the restaurant and the hospitality. The Spur and Panarottis franchises are well known, and they've been an excellent investment. At the turn of the century, they were 2 rand, they're now 12 rand. They're paying increasing dividends. And also still family has by far the biggest shareholding in it. I don't think they've come out and said anything about the World Cup yet, but famous brands certainly have, and Spur probably also did exceptionally well out of the World Cup. And it's very, very conservatively and very well run.
It was, of course, hit slightly by the recession in terms of a decrease in discretionary spending by consumers. Do you see this as a problem going forward, or what is...
I don't think so, Sue. In fact, I think the world economy is probably turned, and I think we're bouncing along a bit at the bottom, but I think we're going up. And also, Spur is in that category. If people want to shop downwards a bit, instead of going to a restaurant at a hotel or a freestanding restaurant, they go to a Spur, and you get excellent value for money at Spur.
And of course, you did mention the World Cup as well as the extended school holidays, and I guess that's going to have a positive impact on the company's earnings.
Yes, absolutely. I'm amazed at the kids that want to have ribs the whole time. This is the place for ribs.
Let's just move on to another sector, which is the insurance sector, and you've highlighted Clientele Life as a good stock to buy.
Well, in the small cap sector again, just on the edge of it, Clientele Life has been listed a long time. It's family controlled again. It is in life insurance and in short-term insurance, whole hard insurance, and it's shown tremendous growth from 1.35 rand approximately at the turn of the century. It's now 8 rand, paid increasing dividends, excellent dividends. It pays out most of its headline earnings per share in dividends every year, has also been a terrific investment these last 10 years and should be going forward.
Thank you.